Welcome. Good afternoon, everyone. Santa Claus still in town. That's the good news as the markets continue to rally heading into the final week of 2023. Sentiment among fund managers a lot more bullish following record pessimism earlier this year. That's gone out the window. Joining me now, Great Hill Capital Chairman Thomas Hayes. Thomas, great to have you here. The biggest bears on the street discovering reasons, hey, to load up heading into 2024. But is it too little, too late? Let's begin there.
Well, this is what a chase looks like when 65% of managers are behind their benchmark. The common denominator right now is we've come a long way in a short period of time, and everyone's calling for a correction or a consolidation in January and February. I wouldn't get too cute about that, Ashley, because it's very hard to short new highs, number one. And number two, we've actually had zero gains in the S&P 500 for the last 2 years since 2021. So it's just starting to come out of that long-term consolidation.
You know, almost 90% of the S&P 500 now trading above the 50-day moving average. Is the bullish market a contrarian sell signal? Let me ask you that.
Well, there is a consensus that everyone, when there are no bulls left, what's the next step? But we do have earnings growth of 12% next year for sure. And we have a lot of positive things coming in the economy. So I think the relative value play is going to be the large caps are trading at about 20 times next year's earnings, whereas the small and mid cap stocks are trading at about 14 times. And then if you look at the presidential election year, on average since 1928, the market is up 11.28%. And when a sitting president is running for re-election, it's up about 13%. So yes, we may get some consolidation in the first quarter, but you don't want to get too pessimistic here, Ash.
No, never. Not me. What about the S&P 500? What kind of target do you have for next year? It's right at 47.72 right now.
Yeah, I think you want to be looking for a high single-digit, low double-digit. It won't be quite the same as 2023, but certainly we could see another 400 points in the S&P 500. I do think the real opportunity, though, Ash, is going to be underneath the surface. Don't just chase the indices. Don't chase what's already up. There are a tremendous amount of stocks that participated less than the Magnificent Seven this year that are going to be great opportunities in 2024 and a way to make a lot more than high single digits or low double digits.
What are you buying here? What do you like?
Well, I like one that's been left for dead. I've actually got two turnarounds for you, Ash. Both fell 85% off their recent highs. The first one is PayPal. Alex Chris is the new CEO. He came from Intuit. He ran the small business division at Intuit. Over a 12-year period, Intuit was a 35 bagger, meaning if you put in $1 million, you got 35 million. He was responsible for 50% of those revenues. He's coming to PayPal. He wants to turn this back to a growth company from a value company. And when I say value company, this stock is trading at 12 times next year's earnings. It's historically traded at 30 times. And what does he have to do that? He's got to increase the margins at Braintree. Braintree is the large enterprise processing. They have 10% of the global large enterprise processing, which is about $5 trillion. They have $500 billion of that. The margins are just starting to inflect in his first and second quarter as the new CEO. And we think that's going to be the catalyst to start re-rating the stock to a higher multiple. We think this thing has legs. It's up 23% off the recent lows. We think this can be up 50 plus in 2024 and maybe a double over the next 24 to 36 months with the new CEO.
Well, Thomas, we are already out of time, but we have PayPal, we have Generac, we hear you. You're a mine of information. Thanks so much for joining us on the show today. We really appreciate it. And by the way,
so much,
I want to give our viewers a reminder that Charles will be hosting the Becoming